I'm going to welcome back Chris Becker. We heard from him a little earlier, Managing Executive for Cyber Banking at TymeBank, but he's not alone this time, being joined by Seamus Rocca. Perfect, the CEO of Xapo Private Bank. Gentlemen, take it away.
So, in the graveyard session,
loads of energy in the room.
what a privilege to have Seamus Rocca, the CEO of Xapo Bank, with us. Some of you may not know the level of OG that is Xapo. Xapo started off as a crypto Bitcoin custodial business, but they took custody seriously. They built underground bunkers, or essentially acquired military bunkers in a mountain in Switzerland, where they did their cold storage of Bitcoin private keys. Started this business in 2014. If you're interested to find out more about that, you can Google this. There's nice pictures back from articles back in 2016, 17 detailing this. And we're very, very hardcore around the way they did cold storage. Started off as a Bitcoin wallet and custodial business. And then around 2020, 2021, wound up that business and communicated to clients that they would now become Xapo Bank. Seamus has been with Xapo for the last 5 years, started off as CFO of the business and now CEO of Xapo Bank, but also comes from an illustrious career with some of the big bulge bracket banks like Standard Chartered. He was just telling me earlier that he was head of liquidity management at Standard Chartered in the height of the global financial crisis in 2008. What a time to be in charge of liquidity at Standard Chartered. And before that was also at Credit Suisse. We've seen what's been happening with Credit Suisse in the last few days in terms of credit default swaps, pricing, and all of this. And then, of course, Xapo moves from, so that's Seamus's background in traditional banking. Joins Xapo, Xapo's a wallet, does Bitcoin custody, and then decides to go into Bitcoin and dollar banking, essentially. Now, in light of some of the events that we've seen playing out in the last year or two, it's a bit of a head scratcher. You're seeing dominoes falling in traditional banking. Why does Xapo decide to become a bank? Would love to hear the story and the logic around that, around how Xapo Bank is positioned in the midst of what is a mess.
Yeah. Well, it's been quite a journey. So Xapo's been around for 10 years. And like you said, we started off as a Bitcoin wallet, a Bitcoin custodian. And keeping your keys secure was part of the service that we would provide. You know, of course, in the Bitcoin space, it's quite common for people to keep their own keys. Of course, that's perfectly acceptable. But as you know, you lose that address, you lose your. So the service was really a Bitcoin wallet where you could receive, store, and send Bitcoin. But our real core proposition was keeping them safe. So security was something that we took very seriously. We had 3 bunkers around the world, not just one. The Swiss one was probably the best known one. It was an ex-military NATO bunker, literally where they kept nuclear weapons. And it became a data center. And within that data center, we had some of our cold storage for your Bitcoin. And we had 2 businesses at the time. We had an institutional business, so we had, you know, the likes of Grayscale and some really big clients. So we had 800,000 Bitcoins in our vaults at our peak. But the really interesting bit for us as a use case was really around retail, around people. And we were clear on a number of things. One, you needed to bridge Bitcoin with traditional financial services, because otherwise, how would a normal person go about the simple process of just buying a Bitcoin? That might sound easy today, was not easy in 2014. So this idea of bridging traditional finance with Bitcoin was something that we knew we needed to do. And if we needed to do that, the Bitcoin side would need to be regulated just like traditional financial services. So in 2014, Wences, our founder and CEO at the time, embarked on a journey to actively look for jurisdictions that would regulate Bitcoin. There weren't many, and Gibraltar was where we ended up landing. So we started with an e-money license on the payment side, really as a way to say, well, look, how do you complement the wallet and say, I can send currency to Xapo and I can store euros, rand, any currency, and buy or sell Bitcoin whenever I want. And with a card, I would have access to my money. So then we thought, well, actually, most people don't know what an e-money institution is, but everybody knows what a bank is. If you ask the average person in the street, do you know what e-money is? No idea. Everybody knows what a bank is. It needs capital, needs to protect your money, and needs to have risk processes, whatever else. So this idea of we are clearly a crypto Bitcoin native company that's gone through the effort of becoming a bank is to really help elevate the industry. To really help elevate the fact that there are people out there. Think about 2014. A lot of people would look at Bitcoin as a way of, anonymity and, complete liberal finance in terms of no regulation and what have you. And we were never of that view. We were of the view that for Bitcoin to go mainstream for its use case of, being sovereign, being a store of wealth, of being finite, of the value eventually going up, it would need to bridge traditional financial services. So what we've really built is a crypto native bank. It's not a normal bank. We're not HSBC, right? We have created a bank that is deliberately offshore. So if you think about Switzerland, people have been thinking about Switzerland as a way of keeping your wealth offshore, as a way of avoiding country risk. And where is that most prevalent? In emerging market countries, in places like, you're seeing now Lebanon, Nigeria, Argentina, hyperinflation, governments confiscating deposits. So we deliberately went offshore so that people would see us as a bank where you can avoid offshore risk, just like with Swiss banks. The problem is, if you go to a Swiss bank and open up an account, you need to have $10 million. Most normal people don't have $10 million. So to some degree, we almost wanted to democratize the private banking experience. And at a time like today, where people are concerned about banks, we've still got Bitcoin. Bitcoin is at our core. It's what we believe in. Keep your money in Bitcoin. But if you want to transact with the real world, we've just announced, as the integration of the Lightning Network to our Bitcoin wallet. We're actually going to expand that so that you can use the Lightning Network funded out of your dollar account. The reason we can do that is because we've got this bridge between a traditional bank and the VASP, which is how we regulate crypto. So we can do a lot of innovation in the crypto space that most banks wouldn't know how to do or dare to do. But even though we're crypto, we understand that for Bitcoin to be mainstream, people need to trust the institutions that handle your money. That's essentially what a bank is. So we want to be seen as a Bitcoin bank. That word does not exist in the Bitcoin space yet, but we believe that we are the closest thing to it. Why? Because we have the track record. We've got the security and the custody protection for your Bitcoin. We have a banking license. We don't just call ourselves a crypto bank. We have a full European CRD4 rules-based banking license in a UK jurisdiction. You can send and receive money. We pay you 4% for the account, and we don't lend. So your money is not tied up in mortgages. So all of the liquidity that we have is in very short-dated tenor money market funds and US Treasuries. So from that perspective, the problems that you're seeing now is Signature, Silicon Valley Bank of having 30-year mortgages that repriced and they lost a lot of money. We don't have that problem. We've got a very basic balance sheet, and we just pass the benefit of that back to the customer. So I think even though it'd be very easy to, after this turmoil this weekend, to bash banks, the reality is banking as a service is something that's still very much needed. What we've done is we've created a blockchain, Bitcoin native bank that knows how to navigate the crypto space.
Fascinating. So, practically speaking then, Xapo Bank has this connection into the Bitcoin blockchain with the ability to do very secure custody, but alongside that also have dollar account capabilities and gives you the benefits. Like you say, people love to bash traditional banking, but we all still use it. There's a lot of value in those networks.
Exactly right.
The SWIFT network is global. You're able to move dollars around the world. It's the original stablecoin, right? And SWIFT facilitates these trades. And so your customers have the benefits of these more traditional, older networks, get a card, also linked to this value store in dollars, where you could also get rid of your Bitcoin in order to spend it at point of sale. And I guess practically, question to you is, so you've had the ability now to build a bank and a core banking system, considering these nuances between traditional currencies that are liabilities on a balance sheet, and Bitcoins that are bearer instruments and connecting to a new type of technology. Talk us through how you conceptualize that and what does that enable you to do in the future?
Sure. So by design, our corporate structure is very simple. So let me just explain a little bit of the mechanics as to how we make it work. And then we can sort of dive into the innovation that it can provide. So back when we started the custody business, if you're going to hold people's Bitcoins, you need to have capital in Bitcoin. Because if we held our capital in dollars and the price of Bitcoin went up, we wouldn't have enough capital to protect customers from losses. So that's really what a bank's capital is designed to do. So we decided that we were going to hold our capital in Bitcoin. So we had a $40 million investment in 2014. We spent half of it to build the business, and the other $20 million, we bought Bitcoin at $100. So we have a lot of Bitcoin at a holding company level as our capital. And underneath that holding company, we have two operating entities. We've got the fully licensed bank and the fully licensed VASP, the Virtual Asset Service Provider, both based in Gibraltar. So essentially, if you send Xapo Bitcoin, it's the VASP that's providing you with that service. And if you want, through one click, you want to sell those Bitcoin into dollars, we essentially buy the Bitcoin off you, sell the Bitcoin, get the cash, and put it into your bank account. It's just that for you, it happens seamlessly. You don't see the back end. So a big attraction of our product is that we make the crypto space simple. You know, for most people in this conference, they're very comfortable with crypto, very comfortable maybe going to MetaMask and doing different things in crypto. But my mom isn't. You know, your mom probably isn't. So if you want to go mainstream, you've got to sort of give people a product that they are familiar with and that they can use in a way that is intuitive to them. So as a result, when you onboard to Xapo, you're onboarding onto both entities. So essentially, you can cross the bridge between the two at any point in time. Well, that's also really helpful when it comes to innovation. So for example, when you use the card is coming out of the bank, so it's coming out of your dollar bank account. But if you don't have dollars in your bank account, we auto-convert your Bitcoin into dollars for you, so you don't have to. So it's super simple. And it's the same with Lightning. We've integrated Lightning to the Bitcoin wallet. The next innovation will be, well, if you don't have Bitcoin, it doesn't matter. You can still pay with Lightning. We're just going to fund it out of your dollar account. So we'll do the auto-conversion for you. So this idea of making the product super simple and auto-converting things for you is really at the core of our product. We want it to be super simple. We want it to be safe because we want you to trust us. And we want to be honest. We don't make money out of the transactions. We in fact, when you do an FX transaction, we give our customers the broker rate. And in some cases, even when you make a payment, we subsidize the cost of the payment. But as a result, we're a subscription service. You've got to pay for the service to become a member. It's not for free. But I think, from a banking perspective, we're honest. Most banks will not pay you much money in your deposits, but charge you a fortune for your mortgages. That's how they make money. I earn 4.5% interest in the money markets and treasuries, and I'm paying my customers 4.1%. I only keep a very small amount. With that small amount of the subscription covering my overheads, I'm profitable. A normal bank wouldn't do that. A normal bank would just keep the whole lot and then charge as many fees as they can, right? So we want to push the boundaries of what it means to be a crypto native bank. And for that, we need, our early adopters really to be the people in this room, to be the crypto enthusiasts that when I explain what we do, get it instantly. Whereas somebody who maybe doesn't have that connection to Bitcoin or crypto would struggle to understand what our value proposition is. Then again, if you're in emerging markets, but you don't have $10 million, but you like the idea of keeping your wealth offshore in a deposit guaranteed bank account paying you 4%, you can onboard to Xapo from anywhere. So we are a bank based in Gibraltar, and just like Swiss banks, you're coming to a Gibraltar-based bank. So that means that you don't have country risk. You've got Xapo risk, and you've got a bank that's regulated under CRD4 based in Gibraltar, which is a UK jurisdiction, with a huge amount of capital. We have 30,000 Bitcoins on our balance sheet, because like I explained before, we bought a lot of them back in 2014. I don't know of any bank today that is as overcapitalized as we are vis-a-vis the ratio of deposits to their customers.
So you're not just full reserve, you excess reserved. In other
Absolutely,
words.
and to some degree that also helps us innovate on the Bitcoin side, because like for example, today we're paying you 1% on your Bitcoin deposits, because we want to do for Bitcoin what banks do for deposits. We want to be able to invest the Bitcoin responsibly for a yield. But the reality is that, the market isn't quite there yet. So we're not using your coins to do that. We're using our coins. So your coins are in a vault, in a Swiss bunker somewhere, completely secure. We just keep enough on a liquidity pool for you to transact. So we're putting our 30,000 coins to work to earn the 1% that we pay you. So you are completely risk-free. So because we're learning, anybody in the crypto space that says they've got an institutional desk, they've got everything figured out, and there's no risk, they understand counterparty risk. The industry's not there yet. It will get there eventually, but it's not quite there yet. So we're actually innovating by using our own capital and our own coins.
So essentially, the old experience, not Xapo, traditional facing crypto exchanges as counterparties in order to acquire these assets, is you've got to have a bank account, you've got to have an exchange account. These two things aren't integrated. You guys are solving for that. But also in the exchange's business model, the incentive is still to keep you trading and active at the end of the day. What I'm hearing you say is essentially Xapo Bank is positioned to marry these two worlds, but you're not really incentivizing people to be too active. You're building on a solid foundation, building a bank for the future.
Yeah.
What you mentioned earlier that I found quite interesting was with these bank collapses in the US, you think there may be a regulatory angle to trying to shut down some of these banks. How does that impact you as Xapo Bank?
Tackle the first bit, and then we'll go to the US, because it's two quite broad conversations.
Yeah.
So in the first one, I absolutely agree. We are a savings proposition. If you want to trade, you're much better suited going to an exchange. If you want to make payments in local currency, you're much better served by a local bank. So one of the things that we learned, though, when we were a custodian is that people came to us to just keep their Bitcoin. They wanted them somewhere safe. 80% of our balances were kept in dollars. That means that even though we had 2 million customers from all over the world, mostly emerging markets, 80% of those people didn't want to keep their own local currency on the wallet because of FX risk. They wanted it because Bitcoin is mostly traded against dollars. So most people would keep dollars on Bitcoin. And we saw local markets evolving, we saw exchanges evolving, wallets evolving locally. And we said, well, that service has already been provided. We're not going to be able to compete in that space. We can be the place where people just keep their savings. So if you want to trade, you can keep some of your Bitcoin in an exchange. But if you want to keep the bulk of your Bitcoin somewhere safe, earning you 1% with access via your card, we're by far the best solution for you out there. If you're worried about price stability or volatility of Bitcoin, you can sell some of it into a dollar-denominated deposit guaranteed bank account, not a stable coin. Now, then again, if you want to send me a stable coin, you can send me USDC and I auto-convert it for you into the bank account. I don't keep it as a stable coin in the way that an exchange would. It's actually being converted into a deposit guaranteed bank account. But whenever you want to go back to the exchange, you can send the USDC back. So you've got that sort of facility of moving it around. What we encourage people to do is to think about investing as a medium to long-term thing. So we're about to release a product we call Wealth, where we allow you the ability to do stock picks. You can buy, Apple stock, Tesla, whatever you want, and have your Bitcoin savings account and your dollar savings account there. Why? Because we're encouraging you to leave that money there for a rainy day, to leave it medium long term, because your money will compound. That's how you will grow your wealth. If you want to go and try and gamble on an exchange with 500 different pairs, by all means, if you're good at day trading, there are people who are really good at doing that, but that's not what we're offering. We're the complete opposite of that. We are, when you've made some money there, come to us and keep your wealth with us, and we invest it for the long term. That's the solution that we provide. Being a bank, we've got a BIC code, and we have access to SWIFT. So as you rightly point out, the US drama that we've seen over the last few weeks has of course impacted us. Why? Because Silvergate, Signature, Silicon Valley Bank have been well-known crypto sort of foundation banks almost. We've been banking with Silicon Valley Bank since 2014 when we were starting off as a business. And a lot of our dollar SWIFT payments have been done by either Silvergate, Signature, or other providers in the past. But as you know, the moment you touch crypto, and we are at our core a Bitcoin bank, it is hard to get dollar rails. So even though we're a bank and we have a BIC code, that will have impacted our rails. If you think about the why, though, we're now seeing a lot of regional banks in the US had exactly the same problem as Silvergate, Silicon Valley Bank, and Signature. We've had low interest rates for a very, very long time. Most people have forgotten the basics of interest rate risk management in the banking book. All of a sudden, interest rate goes up, interest rate risk goes up, you've got 30-year bonds, now you're losing money, you need to raise capital. People are worried to take their money out, you've got a bank run, if you sell those assets, you're going to have a loss, you need more capital. But there's almost like a lot of finger pointing at the crypto banks. It had nothing to do with crypto. It had to do with balance sheet management, and not just with the crypto banks, because other regional banks are having very similar problems. So I think, the Treasurer Yellen stepping in to protect depositors was the right thing. But to some degree, I would argue that it was a crisis of their own doing. The current US administration is very clear that they are anti-crypto. And in my view, they almost pushed the first domino with Silvergate. And I think Silicon Valley Bank caught them by surprise. And by the time he got to Signature, they had no choice but to step in. But they're under a lot of pressure from the regional banks to make sure that they stepped in, because they were being affected as well. But I think crypto is now a scapegoat for the US government to point the finger at the crypto space and go, well, this is because FTX. Not really. I don't think it is. Does that impact us? Yes, of course, but to some degree, we're an offshore proposition. So offshore is sometimes seen as a little bit of a dirty word. When you talk about a Swiss bank account, for some reason that's not a dirty word. You talk about offshore and it is. I think a lot of US crypto companies are going to be pushed offshore. I think that stablecoin adoption is going to go on the increase. So for example, we've remedied the SWIFT problem by enabling USDC in and out, and now we're looking at Tether. 3 years ago, we probably wouldn't have looked at Tether because our correspondent banks would not have allowed us to look at Tether. But if the correspondent banks are so crypto averse that they're not going to work with you anyway, at least not for the next couple of years, while the current US administration is still in power, stablecoin adoption is only going to go one way. But my sense is that we're going to have a crypto winter for the next couple of years. It's not something that's going to get resolved in the next 3 to 6 months. But we've been in the space for 10 years. This is my third crypto winter. It's Wences' 8th crypto winter. We know a thing or two about how to navigate these waters. We, if anything, the 30,000 Bitcoin on our balance sheet is what makes us bulletproof.
I learned from Wences when I was first getting into understanding Bitcoin. I was still working as an economist, and he's Argentinian. And he spoke about the multiple hyperinflations that he lived through, in his lifetime, and saw his family and friends' life savings wiped out
3 times.
as a kid, 3 times. Now, when I was analyzing African economies I noticed the same thing. Countries like Zimbabwe, lifetime worth of capital accumulation and savings wiped out with an hyperinflation. Nations like Ghana, constantly chopping off zeros in order to redenominate the currency because there's so much inflation. And the story goes on and on. And I got really excited about Bitcoin because it's this monetary technology that's open, globally distributed, that people can access in rural areas, even in Africa. And so I'm grateful for Wences's insights and the knowledge I gained from him on that. But I'm interested in Xapo Bank's interest in Africa, you being here, what brings you here. Would love to hear more about that.
Sure. Well, like you said, Wences is Argentinian, and Argentina has a history of hyperinflation. They had a dollar peg at one point, and that peg broke. And I think that is quite a common story in emerging markets. And I think for Bitcoin, for Wences' love for Bitcoin came from seeing that firsthand. So I think if you're living in Africa, you're seeing that firsthand, to your point. So therefore, you get Bitcoin, and you get the why of a Xapo bank. I think if you're in Europe or the UK or the US, Canada, it doesn't hit you in the same way, right? So we generally believe that Bitcoin and what we do is something that resonates very much in emerging markets. Whereas crypto adoption in Europe and the US has been more around making money, the trading, the exchanges. We think that a value proposition like ours, helps normal people like you and me who happen to live in emerging markets and who have local currencies that have to compete with the dollar because they've got to export goods. Through no fault of their own, it creates trade imbalances that weakens their currency. They've got to then react to that to be able to compete on exports. And it's a continual spiral. But the positive side of that is that creates a mindset in the same way as Wences is a natural-born entrepreneur. I can see that spirit in you, Chris, but I can also see that spirit in a lot of people in Africa. That natural instinct to look for ways to, find your way in life, make a business work, make your money grow. That spirit is something that we think that's why we built Xapo. We feel that will resonate with people in Africa. So we need to make sure that people know we exist, and that's why we're here.
Great. And we're glad you're here. I guess at this stage in the business, with the $150 annual memberships fee, it's going to be targeting a certain segment of the market.
Yeah.
I guess there's two questions here. Do you think in the future there'll also be plans to service perhaps a lower income segment of the market? And then, in addition, you mentioned USDC and adding on those rails, for payments and also to store value in them. Can you tell us to some of the other interesting innovations that you're thinking about as a bank, a Bitcoin bank?
Sure. Well, the answer to the first question is easy. We actually started the other way around. The mission was really about the unbanked, was about financial inclusion, and that is something that Bitcoin could really, help solve. Not yet. Price volatility, the adoption is not there yet, but at least at its core, in terms of how it could help, it's certainly interesting. The challenge that we had is if to attract that market segment, the whole product needs to be free, and you've got to find ways of maybe charging a little bit of money on spreads to be able to have a viable business model, right? But the moment you make the product free, the reality is that crypto is a high-risk industry. There's no two ways around it. So you start letting in bad actors, you start to see scams, you start to see, for example, we had one scam which was, people being in cahoots about loading money via ACH and then claiming ACH fraud, but they've already bought the Bitcoin and sent them out, and they split the difference, right? You see all sorts. So as a result, we had no choice but to create a bit of friction at the door. Because if you either want to run a scam or try and hack us or whatever, there are easier options out there. So the $150 is a way for us to attract a certain market segment, but also as a way of having a viable business model that can help us grow and deliberately keep bad actors at the door. As we grow, as we improve, part of the innovation will be on risk management. You know, KYC and AML for a company that is global like us, we accept customers from everywhere in the world except the US, because that keeps us an offshore proposition. We're not tied to US regulation. So if you're accepting customers from all over the world and you're essentially a small bank, you know, the KYC and AML requirements of that are huge. So we leverage technology a lot. There's a lot of innovation where we use geolocation and other tools that keep the customer safe, but that also help us keep out bad actors. So we're in the midst of helping grow the business in a sustainable way. Once we've achieved that, there's nothing to say that we will rethink our strategy around a different customer segment, but we're probably a couple of years away from that. Yeah. But in terms of the innovation, look, there's innovation. You know, we've come a long way in the space, right? When we first started in 2014, all of our architecture was built in-house. For custodians, now you've got the likes of Fireblocks or Copper. You know, of course, you've got the Beckers of the world and what have you. But in terms of technology, you've got, for example, the Fireblocks. So a lot of technology is now commoditized. That wasn't the case in 2014. So we're always looking at how to best work with vendors or whatever. And our core banking system was no different. We looked at, Thought Machine, Mambu, some of the best names in the market. And we did a very sort of detailed comparative of that with ThoughtWorks, a leading consultant in the space. We couldn't find a single core banking system in the world that was as good as ours at handling Bitcoin because they were never built with Bitcoin in mind. So I think for us, that Bitcoin core, that link with the Bitcoin blockchain, the ability to, when we interact with stablecoins, for example, and knowing how to write to a blockchain. We, at one point in time, we even developed our own smart contract token that would do conversion and FX on the fly, for example. So there's a lot of innovation that happens around blockchain technology, how we link to other new blockchain technology. And then on top of that, the bit that the customer actually sees, which is to seamlessly use a dollar debit card with your Bitcoin, to seamlessly use Bitcoin Lightning out of a dollar bank account. Things like that are quite easy for us to do, but you imagine HSBC trying to do Lightning payments out of a dollar bank account. It would take them 5 years.
That's true. We've got 3 minutes. Some closing thoughts. I guess I personally pay attention to Xapo and what Xapo is up to in the space.
Thank you for that.
And I have for many years. And it was very interesting to me how Xapo became Xapo Bank. And the risk management practices that you spoke to are also extremely interesting to me because you're not being a bank with principles of fractional reserve banks. You're essentially building a bank that's fully reserved, but more than that, you're over-reserving your Bitcoin balances. And so that to me is very interesting. I spoke earlier in my conversation around some of the standards that I think industry leaders are going to be setting over the next few years that most likely become adopted and regulated. And I think Xapo Bank may be one of those players, leading the charge around risk management. There's a lot of talk in the industry around proof of reserves and proof of liabilities and all these things. But we had a conversation earlier outside where you can do those things. It's all good and well, but risk management still needs to come into play. And as we've seen, the risk management, even with highly regulated banks, aren't always there. So that's, to me, very interesting what Xapo Bank's doing. And I also really like this idea of a core banking system that's Bitcoin first, because I think you're completely right. When it's not Bitcoin first, it's very hard for those systems to really communicate into the network and to really be proactive around innovating with these new technologies. So I don't know if you've got any closing thoughts.
Well, there's something that you said there. I'll tell you a story because I think you'll find it amusing. So I joined Xapo in 2017. And again, this idea of when I joined, Wences already knew that he wanted us to be a bank, be regulated and everything else. And we were the largest custodian of Bitcoin at the time. So imagine we got 900,000 coins and we got some huge institutions, loads of customer Bitcoins. And we, the royal we, Xapo, had built a tool that would do proof of reserves. So essentially it was a viewer over our vaults in the bunker, that way if you had elected to put your Bitcoin in the vault, you would get a specific address. So it was almost like those little security boxes that you see inside the vaults, right? That's how the old vault used to work. And the tool would essentially, anybody could look at our proof of reserve technology and see that the coins were actually in there. So we went to all the big four, the KPMGs and EYs of the world, and said, we've built this tool, we will give it to you for free, right? If you would just put it on your website so that people would see that it's third-party validated, so you can use your own technology to validate it, so that anybody could come and see that we've got the Bitcoin that we say that they did. They wouldn't do it. They wouldn't do it because the traditional space is still too scared of even being associated with crypto, even though the technology is there, and there were players like ourselves that wanted to do things the right way. And then FTX happens, and you look at LinkedIn, and for weeks, all you hear is proof of reserves. We did that 5 years ago, and nobody wanted to do it. So we're already way past that. Why? Because now it's not just about proof of reserves, but it's also about generating yield. But you're also seeing people advertising, oh yeah, we'll pay you 50% on your crypto. How are you generating 50%? I've been in banking for nearly 30 years. I can tell you now, there's no risk-free way of doing that. So for us, we're a naturally risk-averse crypto company. We want to go the regulatory path, and the bank is, a bank is a very high form of regulation, as you know, and we treat the Bitcoin business to the same high standards as the bank. Even if we're not required to by our regulator, we do it anyway. To some degree, it actually makes our processes and systems easier because you've got the same processes for both Bitcoin and fiat. But more importantly, because it's the right thing to do for your customers.
Great. That was a very interesting conversation, Seamus. Thanks for that. Appreciate it. Thanks for coming out to
Thanks
South
for
Africa.
having me. Thanks, everyone. Cheers.